How much do global financial markets have to fear from a cyber attack? Can cyber criminals, hacktivists, or state actors really do lasting damage to the financial sector with a well-planned attack? And what can public authorities do to keep markets stable and keep our money safe? I'm Scott Martin from Deloitte's Center for Regulatory Strategy, and you're listening to Regulated Radio. I've got Stephen Bonner and Dave Clementi with me here today to dig into one of the hottest topics in all the financial world right now, and that is cyber risk. We'll be talking about the kind of threats that we think the financial sector might face over the coming years in the cyber domain, what the sector is already doing to counter this, and what regulators might start doing to push them along even faster. What's really important here? What's just hype? And what should you expect to happen next? All this coming up in the next 20 minutes or less. It's going to be fast, it's going to be surprising, it might even be shocking. So buckle your fiber optic seatbelts. This is Regulated Radio. Some people say that the financial sector and the regulatory community are always fighting yesterday's battle, making sure that the last crisis can't ever happen again, even though we know that the next big crisis will almost certainly come from a risk we haven't fully experienced yet. Well, call this the exception to that rule. In the last few years, financial regulators have woken up to cyber in a big way, and it's rapidly rising up their agendas to become one of their top priorities. Central banks, financial supervisors, and security agencies are all investing a huge amount of resources into preparing themselves for a world where cyber risk might not just be a technological or a reputational threat, but may indeed threaten the stability of the sector itself. Now, I'm really excited to have Stephen Bonner here in studio with me to talk about this. Stephen is a partner in Deloitte's cyber risk practice and has a long history of helping the financial sector address cyber and technology risk. Stephen, welcome to Regulated Radio.
It's a pleasure to be here.
We've seen a really significant increase in regulatory activity around cyber risk in the financial sector, and particularly in the last year. What would you say is driving all of this activity right now?
There's quite a few changes we've seen recently around cyber risk. Firstly, one of the most obvious things is a number of the attacks have changed into much more visible ones. Historically, people would try and steal data. Now they're trying to extract ransom. So they're being a lot more open about what they're doing. The impact is much clearer. This attracts more attention. And again, as organizations place so much more reliance on digital channels, the potential of a cyber interruption could have a bigger impact on those organizations.
So, Stephen, I suppose this upsurge in regulatory interest in cyber has been inevitable for many of the reasons you've just said, but I'm interested, what's taken you by surprise in the last few years?
Yeah, there's something the financial services regulators have really embraced over the last few years, which is intelligence-led red teaming. So this is understanding what an adversary is capable of doing and actively simulating that with a similar level of capacity against your own systems. And this has been taken on in many different jurisdictions around the world in the recent past. And this is quite surprising. Most regulatory interventions we've seen have been similar to other areas of risk, where they'll do a questionnaire, they'll gather knowledge, they'll test components of it by asking people what they do in circumstances, the sort of classic Dear CEO letters. We've seen other topics. This is one where they were actively exploiting against live systems in the real environment. So it's a very unusual, it's been very effective, I think, at uncovering genuine problems that need to be addressed, but it's quite separate from the ways they've dealt with other risks.
It's kind of like testing with live bullets then, isn't it?
I guess so, and it's a great way of telling if the bulletproof vest works, but there are obviously risks associated with that testing if things weren't to work.
Now, I'd like to bring in Dave Clementi. Dave is a senior manager in Deloitte's cyber risk practice and head of cyber research. Dave, welcome to the show. It's good to have you.
Thanks for having me.
Dave, I wonder if you could tell us how you see the financial sector as being unique to other sectors when it comes to cyber risk.
They're unique in the sense that they're one of the more mature when it comes to understanding and managing cyber risk. I mean, measurement is what they do for a living, and in theory, they should generally be more capable of measuring the return on investments in cybersecurity. In terms of how big the threat is that the sector faces, there's undoubtedly a risk of cyber attacks spreading systemically through the financial sector. For example, attackers exploiting a vulnerability in a cloud service provider or enterprise software that's used by many of the main financial players. And regulators are looking at that. And as I said, financial services should, in theory, be more mature than other sectors. On the other hand, if we look at some of the large service disruptions suffered by financial services over the past several years, they're not necessarily the result of malicious attacks. Instead, some of them were because of overambitious timelines or insufficient contingency planning. And this feeds into the larger response picture and testing piece that Stephen was talking about just a moment ago. So perhaps financial services in some ways isn't as healthy of a place as one might think.
So just thinking about why regulators decided to get more involved in this now, financial authorities like the Bank of England, the European Central Bank, they're primarily concerned with the stability of the financial sector. So Dave, do you think there's a chance that a cyber attack, however well planned, could bring down a large bank or say maybe a financial market infrastructure?
Yes, I think there's a chance of it happening, and regulators absolutely have to anticipate future threats, and there's clearly a growing risk of both intermittent and sustained disruption in financial services as a result of cyber attacks. I think it's useful to note that currently the gap between capability and intent in cybersecurity helps to reduce the probability, I suppose, of a worst-case scenario. By that I mean that most groups with the capability to severely disrupt the global financial system are themselves intertwined in it and would suffer as a result of their actions. Now, contrast this with the lone hacker that just wants to watch the world burn, but does not yet have the capability to act on that intent. Now, over time, this gap between capability and intent is likely to shrink, and we've seen that over the past 5 to 10 years, increasing the risk for everyone. The question is, will financial services make sufficient investment in cyber resilience, i.e. the ability to bounce back after an incident? And the intelligence-led red team testing that Stephen just mentioned is a key component of strengthening cyber resilience for banks. It's been tested in other sectors as well, such as transport and space. So we've seen, I guess one last point to note is we've seen this capability versus intent dynamic before. So if we roll the clocks back to the Cold War fears of suitcase nukes being lost by the Soviets and making their way into terrorist hands, allowing an individual to wage war against a country, that was kind of one of the penultimate fears of massive capability getting into the hands of somebody with the intent to use it, possibly indiscriminately.
I mean, it is interesting. The thrillers in the cinema today have moved from it being about trying to secure the stolen nuclear weapons to hackers disrupting things themselves. So maybe it is playing through in the fears of our subconscious in media. Interesting.
Hollywood always being a forward indicator of all things.
Exactly. It's all a documentary. Yeah.
Now, Stephen, just bringing it back to you, regulators are, of course, not the only ones who are worried about cyber risk in the financial sector right now. Financial firms have been really active themselves trying to manage this risk, indeed, for a really long time. What are some of the recent trends that you're seeing working with clients in terms of how the sector is managing cybersecurity?
I spend a lot of my time with CISOs, the Chief Information Security Officers at these kind of institutions, and there's a few trends I've seen really shine through. And for me, they boil down in the last couple of years around the 4 Cs: community, customer, code, and containers. Community is around, this isn't something that any institution is successful on its own. This is one where sharing and engagement and public-private sector links are absolutely essential. We've seen a lot of focus on that within organizations. This only works when the herd protects itself effectively, so lots of focus on that. Second is customer. When I was a CISO years ago, most of the focus was on internal systems and making sure they were well protected. There's now much more thought going into how the customer is engaged, operates, and how their systems are protected. Because generally, the weakest link is not that of the bank systems, it's of those connecting to and using the bank systems. So extending that perimeter and engaging effectively with customers to help them be more secure is definitely a topic on every CISO's agenda. The third is around code, both shifting from focus on infrastructure and servers into applications and business logic, but also in using code to automate the way security is done. The scale and pace of change in these institutions is so fast that manual-based systems just can't keep up. So a lot of focus on automation and coding security in from the start. And the fourth one, containers, is a mindset. If you recognize that incidents are likely to happen, then the right thing to do is to separate your environment into smaller chunks so that the problems can't spread between these chunks, to make it manageable, to contain problems rather than eliminate them. And we see this in the way organizations are looking at managing risks from the network by separating their networks, putting payment systems on separate isolated networks to make them harder to reach, putting data in an isolated citadel so in the event of a major disruption, at least the data can be recovered and the organization can continue.
Just a quick question picking up on containerization. Would you say achieving that level of security isolation is getting harder to do with the development of the Internet of Things and greater interconnectivity of small objects?
I mean, I think what's fascinating for financial services is they're one of the few areas least impacted by the IoT change. There's a little bit in teleinformatics in the insurance sector, but for banks, they're not really in that part of the world. Maybe in time we'll see your fridge negotiating through your bank to do payments to the electricity company to get the best deal, but now not very much. I think the challenge for banks is that much of their value has been smooth data flows within their organization, connecting things together, finding those insights that data can give you. Clearly there's a risk that segregating things can slow that and produce silos. So that's more the challenge for them rather than IoT itself.
Okay, now, Stephen, normally it's really easy to see how the industry and regulators can often have different interests within a specific area of regulation. I guess this is harder to see with cyber risk. After all, nobody wants to get hacked. Nobody wants their systems to fail because of a cyber attack. Are there areas where you think that the interests of the financial sector and the interests of public authorities might actually differ and then lead to some pinch points in terms of where regulators get more and more involved?
I mean, as you highlight, much of it, there's a very close overlap. So we look at disrupting financial crime. There's an absolute alignment, clearly a key priority for regulators and a key priority for financial institutions. So there's good alignment, very good working. When we step into some of the resilience issues about the whole ecosystem of finance, there's a bit more of a challenge, because if you're a key player in the ecosystem, the impact of your failure might be higher than your own losses, because there's the externality of everyone else's losses, and that can lead to disagreement. And sometimes, just at the edge of cyber risk, we see issues where it could be a nation is one of your regulators, but also maybe hostile to your home nation. So there you could see direct conflicts in there trying to find out information about your security weaknesses, perhaps not only to help you fix them, but perhaps to use them against you should international tensions rise. So most areas there's really good alignment and a very clear purpose of working together to resolve this, but in some places there are elements of tension.
Okay, all right. Now, Dave, a question for you. Cyber attacks aren't only more damaging today. I think it's fair to say that they're also much more visible than they used to be. I think everyone would agree that a great deal of the public sector push that we've seen recently has been driven by the reaction and fear around recent high-profile events, things we've seen in the media, things we've seen in politics. Just thinking about some of those, what do you think has been one of the most important cyber attacks in the last few years in terms of what we learned from it and what it's led to?
From a financial services perspective, the attack several years ago against members of the SWIFT network demonstrated a growth in ambition. Suddenly we're talking about attempts for tens or hundreds of millions of dollars in one go, and allegedly by North Korean-based hackers who are not known to operate without government permission. So now we potentially have a government-backed group hacking for cash, which is something relatively rare, and pushes the financial market infrastructure further into the middle of geopolitical disputes. So that's an interesting one, just in the way it might signal a trend for the future. In addition, another incident, the hacking of several U.S. newswire agencies, happened between 2010 and 2015. It's an interesting case of outsider trading, sort of a classic securities fraud brought into the 21st century. A Ukrainian group is alleged to have made more than $100 million by stealing these newswire releases before they were made public and trading on corporate earnings announcements. Now, what's the lesson here? Those newswire agencies didn't see themselves as a conduit for that kind of activity. And this is something regulators are starting to talk about. Financial firms have to consider the possibility that hacking incidents, may be merely a means to an end, a way of using their resources or access to commit market abuse. And this is something we've certainly seen regulators become aware of and start to talk about more actively with financial firms.
Now, Stephen, just thinking about how firms deal with cyber risks internally, you've mentioned before that you spent a lot of your time working with CISOs. How have you seen the role of the CISO and their responsibilities evolve over the last few years?
We've done a lot of analysis about how CISOs operate, and for us it falls into sort of what we call the four faces of the CISO. This is strategist, advisor, guardian, and technologist. So strategist is that thinking about the future, planning ahead, engaging at a strategic level. Advisor is about giving advice and guidance to senior decision makers and steering their decisions on key things like to go into a new market or execute an M&A. Guardian is around executing the program, doing the back office work to make things secure and execute your projects that improve things. And Technologist is being close to the detail and actually implementing some of these controls in the environment. And if I look back, say, 10 years, most CISOs spent most of their time in the Technologist role, perhaps with a little bit of Guardian. And what's changed, particularly over the last 2 years, partly driven by the regulatory interest in this topic, has been a huge push to spend so much more time in that strategist and advisor roles, in really thinking about how the whole organization needs to operate, how to change the culture, how to engage with the right stakeholders inside and outside the organization, much more than just to focus on the technology. Now, technical controls continue to be important, and we absolutely see roles within organizations, people carrying out those, but the true CISOs of today are spending much more of their time with that outward-facing guidance, advice, strategy components of their role. And it's been fascinating to see how some of the individuals who were strong technologists have made that transition, and also where we've brought talent in from outside the industry who bring those skills perhaps without the knowledge, and how partnering those kind of people with deep technologists can produce a security team that's far more effective in an organization than just a technical purist one would be.
Now, one of the things we've heard regulators say again and again is that cyber risk shouldn't be something that firms put in a silo. It shouldn't be in a single area in the organization. It should be an organization-wide activity. That all sounds very nice to say. It's probably a lot more difficult to achieve. How successful do you think firms have been in achieving this so far?
I think what we see is that organizations absolutely intend to have the very robust 3 lines of defense model for this, along with others, to have a first line executing the controls, a second line providing constructive challenge, and a third line providing independent oversight. And that works great if you can effectively resource all those layers with the right skills. And one of the biggest challenges in cybersecurity is the rapid demand for new capabilities. We're seeing a lot of people in finance being headhunted away into other industries who are far less mature and want to hire finance people to help them accelerate and cover with their risk. This is leaving a bit of a gap in financial services where it's very hard to fill these roles. And this has left organizations having to make choices. Some just by circumstance have ended up with different models, but some are having to actively choose, where do we deploy the minimal resources we can get? Do we put them in the first line to execute, possibly without oversight and challenge? They may not be executing in the best way to manage our risk. Do we put them in the second line, so though the first line may not have the deep skills, we at least have a clear view of the risks we're running and the prioritization? Or do we put it in the third line to give us a very clear sense of where the organization sits and where there are potential issues? And I've seen organizations take very different views on this. It's not one where across financial services there's a standard answer yet. It's clear everyone is trying to get to the 3 lines of defense, but at the moment they're spread very widely in different ways of approaching it in different places, often, I think, aligned to their maturity. If you're immature, it's much better to get on with fixing things in the first line and worry about having transparent risks later. If you've reached a certain level of maturity, then it becomes very important to have an effective second line to make sure you're not investing in the wrong areas or missing some of the broader risk appetite of the organization.
So then, Stephen, out of the firms you've worked with and out of the cyber risk operating models that you've seen in that work, what are some of the best practices that you think really help make a bank, make another financial sector firm more cyber resilient?
I think one of the things we've seen across financial services that really stood out with, say, things like GDPR implementations is that their knowledge of risk and the 3 lines of defense and clarity about the roles absolutely stands out. And that's been very effective in these organizations. They are organizations used to thinking about risk, to considering that tail, to looking at unusual events like some of the cybersecurity ones, and being able to look ahead and think about what might come. So that's part of it. Second thing that's really made a difference in organizations is effective board and senior leadership engagement. The CISOs that have thrived are those that have been able to really share a vision about how this should work and move the culture towards doing it correctly. And often that's part of moving them, but also moving the security team to better reflect the business priorities of the organization. If you're going through a tough period and there needs to be cost saving, going in with a massive plan for enormous investment in security is unlikely to thrive in that kind of organization. Finding ways to sweat the assets you have and get more efficiency is definitely what lands there. And probably the simplest thing organizations can do that makes the biggest impact is run a simulation. We talked about the intelligence-led red teaming. That testing has been very effective. But even without doing the testing, just getting the key stakeholders together, and even as a tabletop exercise to begin with, just running through what they would do if there was a security incident has been incredibly effective about raising awareness and getting people engaged. The time to be thinking about would we pay a ransom to an attack on our systems is not 2 o'clock on the Sunday morning when the attack is happening. Much better to play that through, think about what are the legal impacts, how would we account for the money we're spending on paying these ransoms. These are the kind of issues that if you talk through and understand, it can really help organizations understand the risks they face.
Previous guests on the show noted that making predictions is really hard, and especially when those predictions are about the future. But that being said, before we go, I wanted to ask both of you to go out on a limb and give me one of your predictions for the most important trend or development that you think we'll see in cyber risk over the next 5 years. Dave, you go first.
This diverges slightly from our financial services theme, but I predict that over the next 5 years, we'll begin to see the impacts of poor cybersecurity in safety-regulated environments. So, for example, in transport or health. So, in other words, lives will potentially be at risk due to poor cybersecurity. And we see this now, but in very niche areas. Over the next 5 years, we'll begin to see various levels of automation, automated vehicles on the road. And here's one area in particular where cybersecurity and physical safety will begin to overlap in a way that impacts a large number of people.
Okay, no, that's very interesting. And Stephen, you get the last word.
It's always cheery when you get cyber risk professionals together. Our views of the future are always so optimistic. So mine is perhaps not quite as horrifying as critical safety impact. But I think one of the fascinating things is about so many financial services organizations have absolutely embraced digital. And it's been incredibly powerful and useful for them, but they haven't really thought about what happens if digital went away for a period of time, if there was a major internet outage for an extended period. And it's quite fascinating. You talk to the technical leadership about what they do, and they say, well, we'd download the patches and resolve the issue. I'm like, no, you don't understand. There's no internet. You can't, we'd Google, we'd send WhatsApps to our colleagues and get this. We'd contact the vendors. And there's something about, because the internet and digital channels have been so robust and safe for so long, people have lost the thought about what on earth they do if they were to go away. So I predict we'll see the kind of major outages that would lead to people having to have really sensible backup plans that I think to date people haven't really thought through, because we're just so accustomed to these things being there without interruption, which is actually a huge sign of the success of cyber risk professionals, that we've actually been able to manage even in a relatively hostile environment with organised crime. We actually win so much that people have become accustomed that they think we couldn't possibly ever lose. And sadly, I think we might for some period of time.
Well, let's hope you carry on being just as successful then.
It's not just hope, but yes.
All right, Stephen, Dave, thank you both so much for coming on Regulated Radio.
Thank you.
Thank you.
And there you have it. As if we in the financial sector didn't have enough on our hands with mere financial risk or conduct risk. Cyber risk is undeniably working its way up the priority list for almost everyone in the industry and demanding an ever-growing share of our attention. So that's going to mean a lot of us will have to get familiar with a whole range of new threats to financial markets and vulnerabilities in firms and what to do about them. But that's why we're here. That's why we do Regulated Radio, to keep you right up to date with the most cutting-edge issues in financial policy. Now remember, if you like the show, hit the subscribe button to ensure you receive notifications about new episodes. And if you're already subscribed, you can give us a review on your platform of choice or email us with your thoughts at regulatedradio@deloitte.co.uk. Would love to hear from you. And don't forget, if you like Regulated Radio, show us your love by recommending the show to a friend or a colleague. They will definitely owe you one for doing so. But that's all for now. Thanks so much for joining us, and you'll hear from us again soon.